All right, you guys. I am going to do a quick video with my best efforts to, this is Happy Thanksgiving. It's Thursday evening, and I want to do a quick video if I can on, this is a new experience for me, on why now is a good time to buy GTII. And I don't know how many reasons it's going to be. I'm going to go through my best reasons, and I'm going to start momentarily. Oh, I'm learning. I told you I'm learning. I'm learning. Put that there so I can use this column. All right, so today is Thursday. Tomorrow is a half day, and I expect, if you've seen my other video I did this morning, I expect that Kurt Kramer and his allies are going to try to drive down the share price of GTII tomorrow and Monday. There's been a lot of whinging, and that has a bad connotation. There's been a lot of explaining disappointment on the Twitter feeds, and that I think has left Kurt an opening to sell it down. Now, I'm not blaming anybody. He is going to sell it down anyway, try to sell it down anyway. So tomorrow, I think, will be an opportunity to buy the shares cheaper. Monday, Tuesday through Wednesday, I think the stock can be purchased. Let me check that quickly. Can be purchased with the wash sale rule in effect. Yeah, it would be through Wednesday. To be safe, through Tuesday, to be safe, you could buy shares of GTII tomorrow in addition to what you already own, and then sell them. Let me see if I can give you an example. If you bought on the tomorrow, which is 11/25/22, if you bought 1,000 shares at $2, you could sell, let me go to a different color. Let's say you did buy 1,000 shares. What's a good number? Let's say you bought them at $7 originally. I'm using my finger because my pen is out of juice. So here, this you might have bought in, it doesn't matter, a few weeks ago. But here's the 25th of November. Well, between this is a loss of $5, right? So by buying tomorrow, which is the 25th, you could wait until Monday, December 26th, and check with an accountant first, but you could sell these shares on 12/26 for whatever. Let's say I don't know, in my example, let's say the stock stays at $2, just to keep it simple. Sell it for $2, and you've locked in this loss of $5,000. You now have 1,000 shares with a cost basis of $2, and you've gotten rid of the original share position. You've locked in a loss of $5. Now you have 1,000 shares with a cost basis of 2. Let's see if I can. I'm learning. It seems like a lot of effort to get rid of everything. Okay, so we get that out of here. So now you have, this doesn't matter anymore. This doesn't matter anymore. But you have 1,000 shares at a cost basis of 2. Let's say, just for sake of argument, that you sell that 1,000 shares in February. You sell it for, you sell 1K for $20, right? So you have 20,000 proceeds, right? So 20,000, normally you'd have to pay your tax bracket. Maybe, I don't know. Just to be simple, 40%. I'll use 40%. So you'd have to pay 8,000 in taxes, and you would net 12 grand, right? This is at 40% tax rate, state and local. Okay, so that's 40%. Now, by doing what I just suggested, instead of having and by the way, I want to say here that you sold this at 22, right? Because I'm using a gain of 20,000. So now, and I know that's hard to read. Now let's compare it. That's what you would do in a normal, had you done nothing, had you just stayed where you are. Now let's compare it. I'm going to take this all the way off, and I'm going to use a different color. This might not work. But let's say we sold the same 1K at $22, and our cost basis is 2. So we have a $20,000 gain to pay taxes on. And I've already shown you that it would cost you 8 grand. Well, because you wisely locked in your loss, this gain of 25 can be offset. It can be offset with $5,000 loss. So you end up with a net profit. Instead of 20 grand, you end up with a net profit of 15 grand. And using that same 40% on 15, I mean, I'm slower than most of you, but that's $6,000. You pay 6,000 taxes instead of 8,000 for a savings of 2,000. In other words, you take advantage of the decline in the price and you save 2 grand. Now, obviously this, and I'm looking at that, it's probably a little confusing. Obviously, I'm using unrealistic assumptions in the sense I don't think the stock will be $2 in 30 days. It's always possible because other tax loss selling might be going on. And I think you'll sell it for more than $22. What would be great? Let me see if I can just erase. Yeah, that's great. An eraser is great. although it takes a little while. Maybe this is better. Well, I'll just do it this way again. I guess that teaches you to use fewer colors. But anyway, my point is you might have more than 1,000 shares, you might have less, but you're likely to sell it above a profit. Even if it is 5,000 shares, you're likely to sell it above a profit of $5,000. Excuse me, I said that the other way around. Above a profit of $20,000, whatever. But all I'm really trying to get you to focus on in this example of 1,000 shares, you can, which you bought at 7, you could maybe sell them at the end of the year at 2,000. You're locking in that $5,000 gain. The other way to get to the $2,000 is to take the 5,000 write-off and multiply it by the 0.40 tax bracket. That's $2,000. Now that's one way of doing it, and that's what I'm suggesting that you could do tomorrow, Monday, and Tuesday. Is you could buy an additional amount up to the amount you already own, hold it for 31 days, sell it at the end of December when everyone else probably will be selling for tax losses, lock in your loss, but still maintain your original position and not always be in the stock in case there's a run to the upside in the meantime. The other way you can do it is just sell tomorrow and hope to buy it at the end of the year, roughly around this price. I think that's risky because I think at any time the stock can soar to the upside. And then the third thing is just do nothing. So I'm going to use, I guess I'll use as, all right, I'm trying to learn. Oh, here, maybe I have to go here. Yeah, okay. I'm going to use as number one reason to buy more tomorrow or Monday or Tuesday is taxes, which I just described. Number two reason, it's going to be cheap. It's a great entry point. Number two, cheap. Okay, and then number three, I'm trying to think of situational reasons to do it tomorrow, Monday, or Tuesday. Yeah, the stock price I think is cheap. It could get cheaper tomorrow. It's on sale, so that's under the cheap price, and it's the Kramer discount, as Ham calls it. Now, I want to say right now, again, with all my videos, this is not financial advice. It's a thought process. It's exploring ideas. Also, everything I say is in my judgment or in my opinion. I get my information, I think, from reliable sources, but obviously you have to examine it yourself. All right, so number one is a good reason to buy tomorrow, Monday, and Tuesday is tax strategy. Number two, the stock is likely to, as I said in my previous video, and I don't know how to show it to you, but you can see it on the charts. It's likely to find support either here around 220 or go lower, somewhere around $2, or it can drop in a bear raid, maybe one, I don't know which number to pick, but maybe 190 something, right just below the $2 level. Okay, so now those are the first two reasons. The third reason I'm going to give you, I'm going to call it price. But what I want you to understand that I mean by that, in the oil business, there's an expression. Low prices cure low prices. And what I think is going to happen over the next 2-3 days is if Kurt Kramer, and I've explained in other videos, but I'll quickly say it here. Kurt Kramer and his brother Seth have a group called Power Up Lending. You can go to it, powerup.com. You can also just Google Kurt Kramer SEC. Start there, and you'll see, half a dozen filings and sanctions at a minimum. You'll see that. If you really keep looking, you'll see more. But Kurt Kramer, under one of his LLCs called Geneva Roth Remark Holdings, lent GTII approximately, to my memory, $68,000 in a toxic convertible note, which converted into, theoretically, an endless supply of shares, for purposes of discussion. With the help of the in-house attorney, Richard Nadich, or Robert Nadich, it's on the website. It's on all of the filings. The lawyer issues a letter to the market makers, to the prime broker, saying, and I assume it's the normal practice, but I assume it's Richard Nadich, but maybe they used a different attorney, to say that because of they don't ever outline it, but because of this convertible toxic poisonous formula in the note, we expect to be able to deliver shares on all the naked shorting that we're doing. And so the prime broker and the market makers use that as a cover when they fail to deliver. The brokerage firms that accept your money, cash, T+3 cash, goes to the brokerage firms, they accept fails to deliver and just put an IOU in your accounts. But it's all based on this flimsy letter from the lawyer that says, oh, yeah, shares will be delivered eventually. Now, the system, in my opinion, Wall Street is creating a fractional reserve custodial system, just like the fractional reserve banking system. So the system counts on you and 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 you, not asking for your shares all at one time. They figure, okay, we give an IOU, and so basically, just like in the banking system, the reserves are maybe 5 or 10% of deposits. The banks count on the fact that not everyone's going to come ask for their money at one time. So they can pay out to the one or two people that come. Same with the brokerage firms. In their custodial accounts, they have one or two or three real shares for every, I don't know, with the way the Kramers sell, it's probably for every 100 shares. So they might have 1 or 2% real shares compared to who, we don't know the ratio. But if only 1 or 2 people ever ask for transfer of physical shares or if one of the brokers on the other side of the fail to deliver for some reason decides that, you know what, we really want to close out this trade. We have a margin call or whatever reason. They figure they can get it done one or two situations at a time. And so they don't see the risk of stuffing your accounts with the fraudulent shares that Kurt Kramer sold because everyone's not going to ask for them at the same time. They can manage their risk because there's only trickles of shares ever asked for in real form in any 1 week or in any 1 month. All right. So what price does, low prices, believe it or not, even though you're not feeling that way maybe, low prices bring in buyers. Low prices bring in buyers. So eventually, I don't know the opposite for sated, but the Kramers have puked so many fake shares they can't puke them anymore. And the price starts going up. It's not free what they do. So the first 3 reasons to buy, and I'll use a number of $2 tomorrow on GTII. If there's a lot of buying, I think anything under, frankly, anything under $10 is cheap. But as Ham always suggests, buy half of whatever you want and then bid for the rest. Just like with Cosmo yesterday, when I got fear of missing out into it, I should have waited, or bought. And in net effect, what I paid for it 62 cents, even though I didn't really want to buy more, I ended up bidding much lower to get my average price essentially to 40 cents a share, which is still overpaying. So anyway, buy half and bid for the rest. And I would say anywhere around $2, $2.25 tomorrow will be a really cheap price. So these are my first 3 reasons. Now let's go to these are sort of situational reasons because Kurt Kramer is going to try to sell it off, I think, based on what he's reading on Twitter, and he thinks he has us. So the price is going to be low. And my point on number 3 is buy while the price is low because eventually this will bring in so much buying, the price will go back up. I don't know if that eventually is 1 week or a month, but it will go back up in my judgment. The shares should be really cheap. For all the people that got in at 750 or 8, this is an opportunity, should you still believe in the story, to average down nicely. And then I gave you the tax, they call it tax loss harvesting, establishing a tax loss. So I'm going to just write those down before I erase them. Okay, now I want to go into, there's got to be a better way to do this, but of course I didn't read the instructions. Okay, now one of the guys on Twitter put up an excellent post about, and it was from Peter Lynch, about knowing the story of a stock so that when manipulators like Kurt Kramer try to play with your emotions or leave him out of it, just the stock market can be volatile without manipulators. If you know the story, you don't get shaken out. That's because that's what Kurt Kramer wants, is for you to shake out. He also wants you to change your goals. It's called FUD, F-U-D, fear, uncertainty, and doubt. He wants you to get frightened that the stock is down and sell. He also wants you to get in your head, when it goes back up, just get out at break even. You go, phew, I'm out. He wants to, if you don't know the story, he wants you to think about price and the money you have at risk instead of the story. Now, my fourth reason is going to be the story. And I'm going to just give that a blanket answer. So 4 is the story. The story is story is unchanged. Now, when I first invested in GTII, there was very little of what is now in the story. So not only is the story unchanged, the story is improved. Massively improved over the last 18 months to 2 years. And I guess I'm going to go ahead and add the story is my dog, I'm sorry. The story is pending. What can I write? Pending much better. Much better. Much. I'll just write mucho. So these are 3 reasons, 4, 5, and 6, that are all related to the same thing. So I'll cover each quickly. The story is completely unchanged. So the stock price is down. If you paid $7 for the reasons that you did, now it's even more attractive. I think it was anyway, some famous trader said the stock market is the only place when there's a sale. It might have been Buffett, might have been Jesse Livermore, but when the sale price goes down, people stop buying. It's the only place. But if the story's the same, a cheaper price would imply a real opportunity. Okay, I want to tell you, from the time I got involved in February of 2021, this was a company which in the vernacular was a POS company. What it had was a massive short position, massive. And the chairman knew to call in help, and that cadre of people called ham. So and that's going to be one of my big things I'm going to write down. Because the company had existed for a long time before, because the company had been the target of attack by naked short sellers who criminally sell non-existent shares, and the I don't know what to call them, the company, the people involved, were pretty much well aware of a guesstimate of what the naked short position was. And at that time, that was the extent of the story I knew. I knew that there was approximately 25 million shares in the listed float, with much less actually in the effective float that people had and were trading. Maybe as low as less than 10 million shares. And what was rumored when I first heard the story sort of 18 months ago, to my memory, was that there were 45, 65, maybe even 75 million shares naked short failed to deliver at that time. Now, the other part of the story was that the Power Up lending, Kurt Kramer had lent in a toxic note, had lent about 62 grand, because it was 68,000 face. They discounted it so that Kurt could have a little profit. And I think that discount was $6,000 or $8,000 from par. And there was a couple of grand for expenses. But Kurt wrote the document, Power Up Lendings LLC, called Geneva Roth Remark Holding. And it, in that note, it had penalties for paying back. They gave them something like 60 grand. The par value was 68, something like that. And on top of paying that, say $6,000 or $8,000 premium, they had to pay a penalty on top of that, which I recall being about 25%. So I'm going to say that I'm making the number up, that David Reichman, within the terms that were provided for in Kurt Kramer's document, he might have paid 75 back. 2 months later, when he got about 58 grand in, something like that. Yeah, taking off the discount and the expense money. So anyway, this meant that Kurt Kramer had to return to the company and via the transfer agent the shares which had been allocated in case that the toxic formula was exercised to its maximum. Those shares were returned to the company, to the treasury stock, and Kurt Kramer had no claim as of February last year, no claim whatsoever on any newly issued shares, any treasury stock, any way of getting stock out of GTII. Okay? So those are the only two things I knew. Massive short position compared to the float, and a short that was trapped. At the time, we had no idea who the short was. We had no idea. And then that's all I knew at that time. So I started getting people involved, and I trusted Ham because of a previous situation. Then, I'm going to just say 1 or 2 months later, a couple things happened. Charlie Mayo, who works for Kurt Kramer, called the company and said, the tape's on Twitter, and said, hey, Reike, had a talk with the boys. We're ready to discuss numbers. Basically, he was talking about, can we give you money, Reike, so that you give us enough shares at this de minimis price so that we have a big profit on the shares we naked shorted. Because remember, let's just use a number. Let's call it 60 million. They started shorting it from, to my memory, 20, 30, 40 cents. They got it under 10 cents. They shorted a lot of it under 10 cents a share. But they're trying to make a deal with Reike maybe at half a penny, because they figure Reike's in trouble, wants to stay listed, wants to keep the company going. This is just modus operandi, which you can read in many, many filings related to other companies. So Charlie Mayo called in, and I'm gonna get to that maybe after I finish here. I just want to tell you where the story was. Mayo called in to essentially confirm in just an amazing act of hubris and self-certainty that the shorts would never be caught, they called in and discussed essentially their crime with the company. All right, so then there were weird fundamental things like, to my memory, it was an optician. They merged with an optical company, and they merged with some other little pharmaceutical company. Small things, good but small. And so that was all the story was at that time, 18 years ago. But since, the story has improved. I'm just going to leave it there because many of the reasons to buy GTII are those improvements. But the improvements have been steady, significant, and in fact, you could almost call them company changing to a really positive, great degree. All right, then the sixth thing related to the story also is there is pending news that could just massively change the GTII story overnight. And we'll talk about those. So these next three are the story: unchanged, unchained melody, improved, and there's pending possibility of massive company changing events imminently. All right, so let's clear this, and I'm going to go to, since I brought it up, I'll go to the first one. Now, these are reasons that predated the price being so cheap tomorrow, Monday, and Tuesday, and maybe for the rest of December. But these are all really important things to know. And I guess I'll just pick red for these. That would be number 7, Mayo. Mayo's call. Mayo's call. This, I've already explained a little bit about it, so I won't harp on it except to say this is an act of audacity and I would say stupidity, because it will end up in evidence if this ever goes to court. But this confirmed to everyone involved that there was a massive short position, and more importantly, there's a trapped short. So what makes this different than many stories out there is trapped short. Now that's similar to many that you're in right now, but there's a trapped short. Okay, now we didn't know who that was. It didn't take long to find out, and they found out it was a group of exceedingly unpopular, well-known, I would almost say disliked, but I don't want to make it personal, but a notorious short sellers that everyone on Long Island and most people in this space knew were trouble. So the trap short became Kramer's. They found it out. So one of the strengths in this story, these are all related. Everything I ever say is all related. But we had the confirmation because of a telephone call into the company by Charlie Mayo that the shorts were feeling the pressure and they were trapped. They no longer had the exit strategy of converting the notes into almost endless shares. And we found out that it was the Kramers. Now the Kramers are not Ken Griffin. They are not Cohen. They are just two guys underfunded. My understanding is they started out borrowing money from the prime brokers, and they've accumulated as much as, and it's just third-hand information, as much as $60 million over the last 2 decades. But I don't know how much of that they still have. Okay, so let's move on. There's got to be a better way to clear this all off. Maybe if I do that? No. Okay. Okay. So, I'm going to kind of anchor it in the past, but also fast forward on the biggest reason of all. The biggest reason of all is, I guess it's number 10, is 225 million shares fraud. Oh, this isn't right. Sorry, it's not money. It's not money. Give me your money, honey. 225 million shares of GTI fraudulently sold that do not exist, cannot exist, are not provided for in any document. Obviously, they got a letter when the note was originally signed, which may or may not have been updated, from a lawyer. I assume it's their in-house lawyer, Richard Nadich, saying that to any market maker or prime broker, any sales you accept, there will be shares coming. They will be located. And I think in the past, maybe the prime broker and the market makers and other brokers have never been disappointed. But Kurt Kramer had a choice, and I'm going to put that down as number 11, hubris. I don't know how to spell hubris. You'll find out I don't know how to spell. But Kurt Kramer had a choice when the note was covered. He could have said, I've got another 20 of these out there active and penning where I can destroy the companies and strip them of their market cap. So let's just take our losses here. We'll cover and we'll move on. But that goes back to point number 8. Which is they're trapped. I think Kurt, either from hubris, that he would never get caught and that he's always been successful before, shorting a company into oblivion, and they have a good relationship with Reike, he decided to keep selling. And so let me tell you where that 225 comes from. Unfortunately, none of us know what the exact number is. So I'm going to erase all this, actually. The number 10 is the biggest reason of all is there's a naked position of 225 million shares short that don't exist. Number 11 is just the arrogance and cockiness, the hubris shown by Kurt Kramer to not cover back then. So let me do this the only way I know how, which is a little slow. Okay, so where does the 225 come from? I'll do it in red. At the time of the payback of the note, it was felt, and I got it from many different sources, that the number was somewhere between 45 and 75 million shares. No one knew for sure. No one. The only one that can figure it out for sure is Gary Gensler at the SEC. But based on trading patterns and knowledge of the situation, third hand, fourth hand, that was the range. So I'm going to pick a number in between, and I'm going to pick it maybe slightly in favor of a higher number just because it's easier arithmetic. So at roughly February of 2021, there were 60 million failed to deliver shares that extant. Okay, now's a good time to tell you there was a gentleman last year who did an analysis. He's a old hand on Wall Street. I've never spoken to him. I've heard of his work on this situation, but I cannot confirm this number. So I tell it to you because it's important to know, but I'm not going to use it. But I will tell you at this time, that person believed from his work, not only as the company's name is GTII, it used to be named Treetop Industries or something like that. And I think there was even an iteration before. From all those years before, the number he came up with was 350 million shares that had been sold, phantom shares sold that didn't exist, 350 million. Now on Wall Street, nothing goes away. So those shares, should a buy-in start a fire, we're going to start a fire, start a whatever you want to call it, an avalanche, a Chinese firecracker, pop of buy-ins all over Wall Street. If those shares were sold as phantom shares, they don't go away. They're always there, as an old Wall Street hand told me. Okay, so the first amount to keep in your mind as to where the 225 million comes from is 60 million. Then the second amount is basically February to February is 12 months. And then February to December is 8 months. And that's 20. I don't know what number to use because you're going to want me to use a conservative number. So I'm going to use, I think I'm going to use 4 million a month as the average that was sold. 1 million a week. That means 200,000 a day. Actually, a little less than that because some months are more than just 4 weeks. So I think that's a pretty fair assumption that the Kurt Kramer and his team sold through different LLCs, offshore, hidden. You know, it's all behind camouflage. But there's, well, that's another reason to tell you. Um, but I'll leave that for a second. So I'm going to use 4 times 20. Now you can quibble with it, but I could easily have told you 5, 6, 7 million a month. You might use a lower number, but I'm just going to use 4 a month for 20 months is 80 million. Okay? 80 million. Now, a little bit contradictory, a little bit double counting, a little bit. I'm going to use the last 30 days, 20 days, 30 days, not just this recent period, but in the height of when the stock went to $8, $9, adding up those numbers for, it was either 3 or 5 weeks. I remember a number of around 62, 63 million shares at that time got sold that don't exist. So I'm going to use 60 here. 60, okay? Now the other number is the warrants that the company issued in April or May of 2021. There were something like 30 million, give or take, real shares at that time in the public float. So those were the ones that are supposed to get the real warrants. But in people's accounts, in your accounts, in E-Trade's accounts, in Merrill Lynch's accounts, at that time, there might have been as many as 60 plus a bit, maybe 70, plus the 30, 35, plus, this number that I'm not using. So you could say that there were 80 to 120 million shares at that time that didn't exist. So the warrants were given out on a 1 for 10 basis, and that implies that maybe there were 8 million, 10 million, 12 million false, fake IOU warrants put in people's accounts. So if we use the middle of that, 10 million, those, when the stock price is over 275, those are in play. They're not right now, and they expire April and May of next year, but they can be extended. So if we add this up, 60 plus 60 is 110, 20 plus 10 is 130, plus 30 is 160, plus 50 is 210. And all right, so maybe I shouldn't have said 225, but I think by the time this squeezes, we'll be at 225 million naked short shares in play. Okay, I'm going to take that off. And if you want to use 200, if you want to use 175 or 150, it's okay with me. There's just something on this. Anyway, all right. I guess I have a mark on the screen. Okay. Now, just some more reasons why we're in this situation. I told you before that I'm no good. I told you about the price being low. Well, I just want to bring price up again in a different context. Low, I'm going to say, let's say low average price. Low average price. Unique to any of these plays that you know about, unique to any of them, Kurt Kramer has been selling the stock short up from low prices. Because originally, when he first got involved, it's my opinion that these kind of people actually start selling the public company stock in the open market on a failed to deliver basis prior to signature of the convertible note. And then during the note, even though Kurt went into court saying that he had to wait 6 months, or people like him had to wait. It was an amicus brief, friend of the court brief, that they have to wait. I don't know why he would wait. He breaks all the other rules in my judgment. But anyway, selling during it, he was probably able to, I'd have to look at the chart, but he was probably able to sell some shares 40, 30, 20 cents. But then he got, and maybe in the teens, but then he did the most of his selling below 10 cents, below 5 cents, it looks like. I've already said he should have bought back the note and bought back the shares, but for whatever reason, he didn't. But the stock ran to 4 last year, he sold it down. It ran to 2 something, 75 something, he sold it down. It ran to 225, he sold it down. He ran to 1, he sold it down. Sold it down. So he's averaging up his price, but he's still underwater. And my guess is that his average price is probably 75 cents, but I'll use $1. I'll use $1. And I'll use 200 million shares, not 225. That means on 200 million shares, right now the stock is around $2. I went high there, and forgive me if I assume it'll be above $2 tomorrow. So he's down 200 million. He's underwater because his average price is low. In all other stock trading, shorting, they start from higher prices. Okay, that'll bring number 13 up, which won't take very long to explain. No one is going to help. No friends. Why? No one's going to help Kurt Kramer. Why? Because of this loss. What meat is on the bone? Hey, I need to borrow, 200 million, and just to meet the margin, just to meet the losses. But I'd like to organize a bear raid on the stock over a sustained period of time. So I think we're going to need another 200 to 300 million. So I'd like to borrow $500 million from you, Ken Griffin. Well, Ken's going to say, you're already down 200 million? And where's the stock? Well, it's around $2 right now. It's been higher. How high has it been? Well, it was briefly at almost $9. How briefly? Well, a day. All right, so what you're saying is we can start shorting at around 2, and the most we can make is $2, but you already are down 200 million? So if I help you sell another 100 million shares at $2, we can bring in 200 million, but you already have losses of 200 million. How does that work for me, Kurt? How does that work? Well, we've got other deals. We can look out for you. It's not going to happen. There's no friends. No one is going to help Kurt. And on that point as well, rather than give another number, Kurt isn't going to ask for help. Because if he asked Ken Griffin or if he asked someone, they're going to go, oh my, and they got to know the numbers. It's going to be like what happened to FX when Beyonce looked at it briefly and said, I'm not getting involved. As soon as that happens, let's say it's Ken Griffin. Ken Griffin say, no, Ken's going to have one of his traders start buying the stock. So there's no friends for Kurt on the street. That's my number 13 reason why you should be buying GTII tomorrow morning. It's not financial advice. It's if you're already inclined to buy. And next week. In fact, as long as Kurt Kramer's selling it to you, I'd be buying at almost any price. Okay, now that was I can't remember what the one up there was, but I know where I am. Okay, now we'll go to green just to change it up. I don't know, I'm going to draw a cloud because I don't want to write the word investigation. But Kurt Kramer and his team are under investigation. Now, some of it's active. You can see it in the news. Just go type Kurt Kramer, SEC. Some of it's coming. And I've been shown sort of third degree of separation with the permission of the gentleman at the DOJ that's investigating Kurt Kramer. The New York district, I can't remember the district, up there in Long Island, already found Kramer in violation of usury laws, which is a felony. The company did a count, which might pop up on my list later. The company did an account, a reckoning of how many shares are out there and notified FINRA. So while Kurt Kramer is an unregistered securities dealer, according to pending lawsuits, and I guess technically FINRA can't oversee someone that's not licensed, FINRA is investigating what's in the accounts. Why is the number of shares shown in client accounts so much higher than what's shown at the DTCC? Now, nothing's happened for months, so I don't know the extensivity of that investigation, but it was noticed. The IRS is investigating Kurt Kramer, Seth, and Charlie Mayo because what happens in short sales, when you take a stock from 40 cents down, like I think HPIL, they did it to, you get it down to 0.000003 cents a share. Well, your prime broker is going to be inclined to let you to take that money out. The company's going to go bankrupt, or it's just going to sit there as a zombie for years. There's no closing transaction, so the IRS never knows that the trade closed, so there's no gain. You have a sale ticket at 40 cents, stock's trading at less than a penny, but there's no closing, no 1099. Well, the short seller has access to those funds without paying taxes. So the IRS is looking into that. I know that there are, at various levels of interest, one or two or three journalists looking at Kurt Kramer. And then there's our whole team. I don't know where it's all going to go. I don't know where it's all going to go. But there's a cloud over Kurt Kramer. There's a cloud of investigation. All right, let me see if there's any more groundwork to lay. Okay. There's two or three additional points, and then we can get on to the fundamentals. 16, we now know the prime broker. Prime broker is Alpine. Brokerage. Alpine. This is one underfunded, shameless, questionable, shady a brokerage firm from what I can study and in my judgment from studying it. It's possible that Alpine is in cahoots with Kurt Kramer. It's possible. It's certainly likely that Alpine looks the other way on a lot of margin calls and a lot of failures to deliver. But it is not a strong brokerage firm. So liquidity around Wall Street is contracting. You can probably tell me better than I can tell you the number of firms that are at risk, the number of situations that are turning into really stressful claims on capital. And in that situation, Alpine will have no choice but to start putting pressure on Kurt Kramer and Kramer's accounts. Now, I would bet that Kurt has many prime brokers, but this is what I understand, this is the main one. He probably has, I know he has, dozens of LLCs. He probably has accounts overseas. But here is a weak link in the Kramer team. Or I might as well bring it up now. There's a lawyer out there going after, one at a time, these kind of naked short sellers for RICO, racketeering and something corrupt organization. I can't remember right now. Racketeering, I can't remember and Corrupt Organization Act. This is coming, and it's a threat to Kurt Kramer's freedom and the rest of his crew. So I don't think Alpine and the seedy market makers and even part of Kramer's own team are going to survive these investigations under 15 and then potential RICO charges, which are serious. So that gets me past everything I wanted to tell you about sort of laying a foundation. Now I want to, can you see that? I have to, each dot I made, I have to erase one at a time. Oh, well. All right, so I'm up to 15 reasons. 15 reasons. Okay. Now, I want to tell you about not every fundamental thing that's happened since last year, but just 1, 2, or 3 of them. I'm going to ignore the eye care, the art gallery, I'm going to ignore the 2 attempts at digital dividends that were met with roadblocks. I'm going to ignore the acquisition and then sale of Beyond Blockchain. I'm going to ignore the gold company that was purchased out of Dubai. And I'm going to ignore, there's one more thing. But anyway, I'm going to ignore most of those fundamentals that are all real, they're all substantial, and they all add to credence to the fact that GTII is not going to go back to being a POS company, and it's going to have revenues. It's going to have revenues. But what I want to focus on, which will be number 16, I think, is I'm going to do this out of order. I'm going to bring up Trento. Now, Trento was something that we all got excited about because it's a massive lithium mine project in Chile. There's a lot of moving parts. There's governments, there's bank lines of credit, but the amount of money that I remember was $350 million. Now, it took longer than a year. It was announced. You can go into the news stories and see it. But it took longer than a year. A lot of it, when you do international deals and governments involved, it starts, everyone starts wondering, is this real? Going back and forth, blah, blah. So anyway, I don't know if it was required by the SEC or it was just an abundance of caution from the GTII's attorneys, but they made a filing with the SEC that said this was essentially a year had passed, nothing happened, and I don't remember the wording. I don't think it said it's dead, it's over, but a bunch of legal words that we don't expect anything to come of it. Well, I bring that up because this Trento mine deal, as far as the rumors I hear, has never ended. And over the course of this past year, I've heard several times that we were 30 to 45 days away of a finalization of that transaction. Now, I'm not giving it huge upside potential here. If I had to pick, I would say 25 to 50% chance of success, but it's not dead. It's out there. So that's my number 16 is the potential of the lithium mine. Okay, number 17, 1-800 law firm. Now everyone's gotten impatient with this. Everyone's gotten impatient with this. Well, I don't know if you've ever hired attorneys before. They're like house painters. They work by the hour. You can't get rid of them because they don't want to lose their job, and they go slowly. They're so slow. It's like they have to show everyone how smart they are. But there's also a reason for it, because their reputation's on the line and they don't want to get sued back. Well, that took many months to haul across the finish line. It was announced as recently as a couple of days ago, but then maybe a month or so ago, that was finalized. Pending auditing. Pending an audit. Well, the news that just came out, and I'm going to put that down as number 18, I'm going to call it the audit. Number 18 is the audit. Auditors are also deliberate and slow. So writing notes to myself because I'll never remember what I said to you. The audit is pending, and there was a news announcement, I don't know, 3 weeks ago, and then just as recently as 2 days ago, confirming that the audit's on track, and to keep it short, they expect it to be finished by the end of this year, 2022. Now, it's already November 20, whatever, it's Thanksgiving. So the odds of it finishing by the end of November decrease, obviously, and Christmas is coming. So who knows? Maybe it doesn't get done until right at the end of the year. But auditors are slow. But once that's finished, this is wrapped up in a bow. It's done. It's yay. Yay, 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 yay. Now that, I think, could happen as soon as next week or as late as the final week of December, based on what has been announced. Now, if once the audit is done, they will almost immediately announce the merger is complete. Okay? Now let's just go through that. I think it was on Twitter, but I want to give you two numbers. This is accumulated, and this was as of sometime in this summertime. Revenues, backlog, 85 million. Revenues, 85 million. Those numbers have grown. It's been several months since then. This is a good law firm. What I remember hearing was income accrued out of that somewhere at the margin, somewhere at 50% of that number. So let's call it I don't know, let's call it 35 million in income. Well, these are huge numbers. This will take what Kurt Kramer's hoping to do, modus operandi, is to drive the company into zombie land. These are real numbers. Real numbers. Okay, so that, we went through that. The timeline on the audit is anytime in the next 5 weeks. Now, this I'm trying to think what I'm going to go. Everything's going to start coming all at once, so I can't really organize it in a timeline per se. But the next thing I want to talk about is Upstream. Okay, so 19A is dual listing. $19B is digital divvy. So 19 in general is Upstream. Upstream. Now, on the dual listing, this will be announced almost certainly as quickly as possible, although you have lawyers involved, after the audit is finished and the merger is announced. The dual listing will move forward. Now, it has a period of time and various steps So I expect that to be sort of a February time frame. February plus or minus, but I'll go with plus. It could be longer. So the dual listing will be coming, and that's a real threat to any naked short. Why? Because you can't short on that listing. It's an out of the United States financial systems exchange, and it's blockchain. So that's a real threat to people who purvey phantom shares. Now, the digital dividend is really exciting. As soon as the audit's done, as soon as the merger's complete, and that because they're working so closely with Upstream, they can issue a digital coupon through Upstream, say for $500 worth of legal fees per share. They could issue a distribution of, $200 credit towards eyeglasses per share. They could issue what was already announced. They could issue a pending warrant for all of you guys as a digital dividend as a warrant. So there's a number of things that they could start putting out as digital dividends. But the most likely one, 19B, is some sort of coupon from the law firm. Well, this not only forces account, it forces each brokerage firm that has just toilet paper in your accounts to want to scramble to close out the trades. They don't want to be short $500 per share. Even if you argue that no one's going to use them, it's not worth much. What brokerage firm wants to take the risk of being short something they can't deliver? Plus, it's fraudulent to leave it in place. What if a law firm, and guess what? It is a law firm. If they sue, what's the brokerage firm going to say? What's the brokerage firm going to say? Hey, we didn't know? No, it's going to set off a scramble. All right, so that's that. I'm almost done, believe it or not. I'm almost done. I would say 3 more things, and they're all related. So number 20 relates to that dividend. I'm just going to write divs. 21 is Wes Christensen, and 22 is law firm. Okay, so the Upstream provides a vehicle who they're tight with and working extremely closely with. Upstream provides a vehicle of issuing digital dividends over and over and over and over and over and over again. So what if there's no reaction to issuing a digital coupon for $500 a share? Okay, we're going to issue a digital dividend representing $400 off 2 pairs of eyeglasses per share, if that can be organized. Or we're going to issue, as I just said, the warrants as a digital dividend. Or, since some time's gone by, we're going to issue a digital coin using our buddies at Beyond Blockchain. So it won't quit. It won't quit. these digital dividends will not stop, and there's no brokerage firm out there that wants to join the Kramers in fraud. There's no brokerage firm out there that wants to take the risk of a liability on all of their books of something they can't deliver. At some point, it's going to force in buy-ins. 21. Wes Christian is working with Finger, and I don't want to get off into another story, but Wes Christian is the king of lawyers going after short sellers. Finger, CRTD are both the Lynn partners, but there's so many, and I'll mention it now, but it's another point. There's so many whales and senior important people involved in all three that it won't be long, in my judgment, before GTII considers hiring Wes Christian to fight Gibson Dunn, who Kurt Kramer hired. It's a white-collar criminal firm, and I'm not going to add Gibson Dunn on my list. That'll all be part of the cloud of suspicion. But Wes is all about discovery. He's all about tracking phone calls, time and sales, where the money went, LLCs. So that's huge, and it's a little speculation on my part, but it just makes so much sense. Then number 22, 1-800 Law Firm is a law firm. And once it merges, they have hundreds of lawyers that can each spend time on this case. It's in their best interest. And they can bill the estate. They can bill the costs to the pockets of money, whether it's Merrill Lynch or TD Ameritrade, that failed to deliver the shares and failed to deliver dividends. So 1-800 Law Firm can increase their revenue and income, but they can also better their own situation. So it's a big step. All right, I'm going to erase that. And I can't draw, so I won't even attempt to draw. I don't know what number I was on. 19, I think. So number 20 is whales. Whales. Skinny. And what? Huge. Skinny and huge. So there's a lot of whales in there, and it kind of ties back into my original point that as the stock price is down, they can add to their positions. So this is a huge thing to not forget, that it might take the rest of the year, it might just take 1 or 2 days, but to recover in the stock price won't take much buying from these whales. Okay, let me just see if I left anything out. No. So I just have 2 more things that are not, well, I guess one's a reason. One is a reason. So I guess I'll add one more reason. And then I don't know what happened there. I'm going to leave it. I guess you won't see me. One more reason, and I think it's number 22, 21. Let's say it's number 22. The biggest reason of all is ham. Biggest reason of all. Now, close behind is Lou, Avid, GTII Army, Company, Tommy. There's a whole bunch of people. But number 22 is Ham. And Ham's not going to quit. And you're going to find out that dedication will work out. All right, so now the last thing I want to show you is much more, I don't think it's a reason. It's just sort of the situation we're in. I got to do this from memory. We're kind of in, we had the stock trading all the way up and then kind of in here, and then it's dropped. And I'm not using it quite to how it has. It spiked down, it's up a bit, but back over in here, there's some spikes down. And right around here is $2.20. But there's a 200-day moving average that's coming up like this, or it might even be falling down now. And there was a 50-day moving average that was broken up there. So there is, you can argue there's some support in here if you draw it flat. You can also argue a couple of other patterns, but I want to keep it simple. But unfortunately, some of these lines come down, and there's more over here to the right. And there's a gap right in here, a small one, very small. And there's the $2 number here, and this red line actually is a little lower than where I drew it. So my point is, I think you could see tomorrow $1.95 tomorrow or Monday. Maybe it spikes lower than that. Maybe it spikes lower. Okay. Everything on Wall Street is not free. And you guys can think that these guys are going to get away with this. Yesterday, I don't remember the numbers, but 50% of the volume was naked short. And then there was probably cross trades and washing. Let's just say 1 million shares on a given day, or over 2 days, are sold naked short. It's costing, I'm guessing, Kurt Kramer 10 cents a share plus, just to get the market makers to do that trade. Then there's commissions, which maybe is only 3 cents. Then there's the prime broker, which is probably a monthly charge. Then there's Gibson Dunn. And then there's the boiler room. And I'm sure and there's interest. There's interest payments. But right here on 1 million shares, that's 130,000. Let me change this. Let me use a different color. 130,000. Just to make that happen, just to make market makers and commission happen, 130,000 on a monthly, and that's just 1 million shares. Let's say they did 4 during the month. That might cost him 300,000 or 400,000. The monthly cost to the prime broker is probably 50 to 100,000. Call it 100. Gibson Dunn doesn't work cheap. He's probably spending 200 grand a month there. The interest charges another 100. Look, I don't know the exact numbers, but just adding this up, that's 1, 2. It could be costing the guy 500,000 a month just to maintain per month to maintain this position. Nothing's for free. So you can wonder, is he going to stand forever? I don't think so. All right. What can happen to the stock price? I don't have a chart that I can show you on here because I don't know how to do it. But you've had this chart here. It came from 60 cents and it went up to $9 basically, and it's been going down since. It broke out of this triangle. It's going down, and probably, unless whales come in, could have one more spike down. But low prices solve the problem of low prices. And I hope by my long list of things that I've said, there's plenty of reasons for whales to buy in to this story and buy in to the upside. So I can't draw what's coming next because I don't know. But let's say this is $2 a share here. $2. This is $9 here. All of this is shaking out weak hands going to strong hands, unfortunately, and it's fraudulent selling. What's the dynamic in this selling? Wash trades, illegal. Cross trades, illegal. Illegal. Spoofing, illegal. Naked shorting, illegal. Hiding tickets, illegal. Moving funds from offshore, from accounts, illegal. All of this has one common denominator. It's the naked short doing it, who I hope over all these months, it can't be anybody but who was trapped in the first instance. Kurt Kramer, Seth Kramer, Charlie Mayo. They may be using other different, as Ham always puts it, it could be their mom. They use different names, but they're doing it because they're trapped. They can't take their foot off the landmine. Well, what's the common denominator? The selling pressure comes from Kurt Kramer. Okay, so what's the dynamic? What's the dynamic that's going to turn this sucker around? Well, in the short run, I think I told you the fundamental news items, which is going to lead to, I think, demand. But let's just assume that everything takes right up to year end. In January, and assuming the whales are there, the investigations are there, the the stress on the prime brokers are there. The stress on the market makers are there. I mean, if someone called you up and said, "We want to see all the tickets on GTII," are you going to keep accepting orders? I doubt it. So, one dynamic is the Kurt Kramer, the Kurt Kramer sale. The only button he has is to sell, 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 sell. That button, he won't take it away, but that button gets taken away by either the market makers, the prime broker, the regulators, and arrest his clients, or the follow-on from an occasional buy-in. It could be a FINRA or SEC gets involved. But that's number one dynamic, is the Kramer stops selling. The second dynamic I'm not a very good artist. But the second dynamic is, I can't. The second dynamic is kaboom. The direction is up because it's buy. What happens when brokerage firms finally assess that there's risk and they must cover trades is they will buy in the error account. And the mistake that Kurt Kramer has made, and it shows why, according to one source, he was dismissed as a broker. I don't know. It was just one source. Never trade an error. So what Kurt has done is continue to dig his hole, dig his problem, make it worse. What is going to make money for all of you, and the problem is time. We don't know the time. But what is going to make money is buying in 225 million shares without regard to price. And that could happen in a matter of days, no more than a couple of weeks. And I'll give my targets from $2. I'll give my targets from $2. I haven't changed my other targets, but I'll give them from $2. This is just to be more conservative. It's just to be very conservative. $20, I give that 99% chance. I would say $32. I give that 99% chance. The top line is just 10x. This, I think, is 16x, unless I did the wrong math, but anyway, it doesn't matter. And then this is 100x from $2, and I give that a 90% chance. And 1,000x from $2 is 2,000. And I give that an 80% chance. Now, my numbers, I really haven't changed, but if the squeeze were to happen tomorrow, which it could, I guess you might say that you have to start your calculations from $2. But I would love it if it took a while to get back up, struggled around a bit, and my targets would be much higher. But that's you got to use your own money management. And then, because I can't remember if I've forgotten anything, and I can't remember, I just want to say happy Thanksgiving. And we will see you tomorrow, maybe. We'll certainly see you Monday. And I appreciate your time on this as well. My belief is buying GTII under $5 is a gift. Could things go wrong? Sure. But as long as the Kramers are selling, it's artificially low prices, and we're in it. We're in it for a short squeeze, and the company's doing everything it can to force that. And this is unique, I think, in any story. Ham says it's the best setup he's ever seen after 25 years. And I know it's been painful. I know the price coming down, I've shared it with you, is really painful. But if things go straight up, they come down quickly. So it's good to shake out the weak hands. It's good to have committed investors in here now. And as long as you believe in the short squeeze thesis, these prices are highly attractive. If you're tired of the stress and you're tired of the helplessness, I tried to give you one thing you could do from a tax loss harvesting, as they call it, apparently, idea. But, life is life. The markets are made of all sorts of decisions, and I'm not saying you have to stay in. But what I would like, and I try to make it my commitment, is to fight the FUD as much as possible so that you have a chance to see what happens when a short squeeze occurs. And I think you'll forget everything that's been tension-ridden for the last few weeks and just be amazed at the power of the upside move. So, okay. I thank you very much. We're going to have a good day tomorrow. And there's a coin coming. There it is, the GTII coin. I don't know. Anyway, happy Thanksgiving and cheers.